Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 23rd, 2025, and we're diving into Eagle Bancorp's fourth quarter 2024 earnings report. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Eagle Bancorp, a major community bank in the Washington, D.C. area, has just released its Q4 2024 results. There's a lot to unpack, from their net income figures to strategic initiatives and challenges.
Revenue and profitability overview. Let's start with the financial highlights. Eagle Bancorp reported a net income of $15.3 million, translating to an adjusted EPS of 50 cents. How does this compare to expectations, John?
Well, the adjusted EPS of 50 cents slightly beat the analyst's forecast of 48 cents. However, it's a decline from the previous quarter's 72 cents per share. The net interest income also saw a slight decrease to $70.8 million, primarily due to lower interest income on loans.
And what about their dividend announcement?
Eagle Bancorp declared a cash dividend of $0.0165 per share, which is a positive signal to shareholders about their confidence in future cash flows.
Operational challenges and strategic initiatives. John, can you elaborate on the operational challenges Eagle Bancorp faced this quarter?
Certainly. The company saw a decrease in non-interest income to $4.1 million, largely due to lower swap fee income. They also increased their provision for credit losses to $12.1 million, reflecting concerns over asset quality, particularly in their commercial real estate portfolio.
How did these factors impact their net interest margin?
The net interest margin decreased to 2.29%, down from 2.37% in the previous quarter. This was influenced by a higher mix of interest-bearing deposits and the challenges in managing loan interest rates.
Asset quality and capital position. Asset quality seems to be a significant concern. What are the key points here?
Nonperforming assets increased to $211.5 million, which is 1.9% of total assets. This rise is mainly due to a $74.9 million commercial real estate loan moving to non-accrual status. However, the allowance for credit losses increased slightly to 1.44%, indicating a cautious approach to potential loan defaults.
And how does their capital position look?
Despite these challenges, Eagle Bancorp maintains a strong capital position with a Common Equity Tier 1 capital ratio of 14.63% and a tangible common equity ratio of 11.02%. This provides a buffer against potential financial stress.
CFO insights. What insights did the company's leadership provide in this report?
CEO Susan G. Riel highlighted the transformative year for Eagle Bancorp, focusing on management changes and strategic initiatives to reduce uncertainties. However, she acknowledged ongoing challenges with asset quality and valuation risks in their office portfolio.
And what about the CFO's perspective?
CFO Eric R. Newell emphasized their success in utilizing excess liquidity to repay significant debt, which should benefit funding costs in 2025. He also noted the increase in non-accruals, but pointed out a decline in total classified and criticized loans, which is a positive sign.
EPS forecast and market reaction. Let's discuss the EPS forecast and how the market reacted. Analysts had forecasted an EPS of 48. How did the actual results compare?
Eagle Bancorp reported an EPS of 50 cents, which slightly exceeded the forecast by 2 cents. This positive surprise, albeit small, was well received by the market, reflecting confidence in the company's ability to manage its financials amidst challenges.
How many analysts were involved in this forecast?
The forecast was based on estimates from 2 analysts, which suggests a limited but focused coverage on Eagle Bancorp's performance.
Key takeaways. In summary, Eagle Bancorp navigated a challenging quarter with a slight EPS beat and a strong capital position. However, asset quality remains a concern. John, any final thoughts on their investment prospects?
While there are challenges, Eagle Bancorp's strategic initiatives and strong capital ratios provide a solid foundation for future growth. Investors should keep an eye on their asset quality improvements and funding cost management in the coming quarters.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Eagle Bancorp's performance in the comments below.